Yeah, I reckon we get started, Erica, if you're ready.
Yeah, sure. So, hello everyone. Thank you for joining our webinar today on JobMaker credits, eligibility and management. And this will be our final webinar for 2020. So today we'll be discussing how to access and manage the JobMaker hiring credits and how to make sure you are applying for the right support. We'll also talk about the key dates, payroll dates, reporting obligations, and also the interaction between JobMaker, JobKeeper, and other government employment initiatives. My name is Anurika, and I'm an accountant at Smart Business Solutions, and I'll be your moderator today. I'm also joined by Paul Cunningham, associate at Smart Business Solutions. Many of you are already familiar with Paul from other webinars we have conducted this year. Next, just a little bit of housekeeping before we begin. Most of you will already know how Zoom works, but just in case, here's a quick overview. You can use the chat facility to send text chat to all participants or privately to a specific participant. Finally, you should be all in mute. We'll have time for questions at the end of the session, so please try to be in the Q&A box, and we'll do our best to address those queries at the end. We estimate this session will take around 30 to 35 minutes to cover everything. We'll also be recording this session, so if there is anything you missed or want to revisit, you'll receive an email with a link within the next few days. Okay, so we are ready to begin. So over to you, Paul.
Thanks very much, Anurika. And welcome to the JobMaker. So this is the latest of the government policies to help us, I guess, not survive through the COVID period, but to get out of it and to get the business growing, get the jobs back. So we'll cover today, first of all, identify if you as an employer can qualify. That'll be most employers. Most employers will be able to qualify. I suspect as long as you are adding new staff, the tests there aren't as stringent as they were for the JobKeeper. Then we're also going to look at working through the key tests for employees. And that's going to be the big difficulty to see, are the employees that you are hiring, do they fit into the JobMaker program? And we're going to discuss some practical issues around all of that. What we are going to do today is we're not going to go into detail regarding the calculations themselves. There's a couple of reasons for that. First of all, is it's quite a detailed calculation. So it would take up, probably another 15 or 20 minutes, which are probably not necessary here. And the second part of that is the ATO actually does that for you. So you'll submit the information and the ATO will calculate it on your behalf. There is an estimator on the ATO website that we can share that will give you the information if you wanted to have a look at what your likely return would be. So just to start off with, just a bit of the history of the JobMaker. So it was announced on the 6th of October in the federal budget. The bill was passed through Parliament, a reasonably short time after that. But much like the JobKeeper, and this has been the difference between most legislation and what we've been experiencing this year, is that the legislation has been a little bit short on the detail. And the legislation has basically given the power to the Commissioner, the ATO Commissioner and the Treasurer to create what they've called legislative instruments and to basically just define how the policy works, how the JobMaker scheme works. So the Commissioner and the Treasurer released their rules last week. So that's why we're now in a position to hold this webinar for you. And so that's what we were waiting on to get these details out. So we do have final rules now that we're comfortable with and we can present and we can move forward. Okay, just as an overview, so the idea of JobMaker, which you've probably seen in the media, it's designed to encourage businesses to take on additional employees. In particular, it's encouraging businesses to take on younger employees. So if you take on an employee, eligible employee aged 16 to 29, you'll get $200 per week for that employee for 12 months from their start date. Employees aged 30 to 35, $100 from that date, from their start date. There are 8 JobMaker periods starting from the 7th of October. We'll run through those in a little bit more detail later. Just an important one with the age, I think it's really important to note that the age relates to the date that the employee starts their employment with you. So obviously if they turn from 29 to 30, they're still classified on that $200 rate, and same if they're 35 to 36. So it's the date that they start employment with you, which is their age, and that stays with them through the program. Some key points: amounts paid quarterly in arrears by the ATO. So you'll pay your staff as you go, and then at the end of the quarter, you'll submit your claim and you'll get the payments back from the ATO. As I mentioned before, it's a very different to the JobKeeper. There's no decline in turnover test here, so we don't need to prove that we've had any downturn or suffered at all from COVID. You could be booming for the last 2 years, and you're still applicable to this test, to this policy. And again, no date that you had to be in business by. You can start up a new business now and still be eligible to access the JobMaker program. So some big change, some big differences there. Obviously, the objective here is the government wants businesses to employ people, and that's the objective there. So the eligible businesses generally are there's a lot more eligible businesses for the JobMaker than there was for the JobKeeper. So the main features of the JobMaker and what we're going through today: the employer needs to meet certain conditions. As I said, as mentioned, they're not as restrictive as it was for the JobKeeper, but there are certain employers that won't be eligible, and there are certain issues that you need to make sure that you've got addressed. The employee needs to meet certain conditions there. That's probably going to be the big one. Are the employees that you hire eligible? That's going to be the main issue. Calculating the payment, again, we're not going to go through that. We're going to go on a high level. We'll talk about how that's calculated. And then the ATO reporting obligations, which we'll obviously go through in detail, with the aim that you guys can do it yourselves by logging on through your government services. Obviously, we're here to help our clients as well if they do need. JobMaker periods. So the JobMaker periods run for 3 months at a time. Just to make things a little bit more complicated, the ATO has decided not to run on just normal dates, but to actual, obviously it's after the announcement on the 6th of October, but they probably could have made things a little bit easier for us, but anyway. So the first JobMaker period, for example, runs from the 7th of October to the 6th of January. You've then got a claim period. So the claim period starts the first of the following month of the JobMaker period ends, and you've got basically a 3-month window in which to make your claim. What the feedback that we've had from the ATO is that they're going to be really strong on the deadlines here. So JobKeeper, they reckon they were very flexible. I think they were somewhat flexible with the dates. What they're saying, either way, the ATO is saying there's going to be no flexibility with these dates. So what we're recommending is that if you're intending to use the JobMaker, get in early, make sure you've got all your reporting done early so that you can make amendments if needed, or just make sure that you've ticked all the boxes. And then I think if you do that, start looking at that from sort of early to mid-Feb, then you should have plenty of time to get it in and done by 30th of April. The STP report deadline. So most people will be familiar, I imagine, with single touch payroll. If you're using single touch payroll regularly and properly, then that should be no issue again as well. That you're going to have everything lodged well before 27th of April. But again, get it done as early as possible. Make sure that it's all right so that if you do need to make amendments, you're in a position to do so without having to rush. Okay, employer eligibility rather. The employer needs to be an entity carrying on a business or a non-profit that pursues its objectives in Australia, or certain DGRs as well. The entity needs to have an ABN and be a registered PAYG withholder, which is all pretty basic stuff for most businesses, I would imagine. Here's a new one for the ATO that I'm sure the ATO was love to have in there. To get the JobMaker, you can't have any outstanding tax returns or BAS returns that the entity was required to lodge in the 2-year period to the end of the particular JobMaker period that you are applying for. So if you have outstanding, so by outstanding overdue tax returns or BAS statements, then before you make a claim for JobKeeper, you need to make sure you're on top of these. So if you are in this position, or if you're unsure, then I certainly encourage you to check with us so we can go through it and make sure your lodgements are all up to date by February, March, so that there's no issues with the JobMaker in this process. Some important things to note with the tax lodgements is that it's only overdue things. So if it's not due, then it's not a concern until it becomes due. And you don't have to have paid the amounts, you just have to have lodged it. Obviously, there will be a requirement to pay, and you can set up payment plans and things like that. But in terms of the JobMaker, the important factor is that you have lodged your tax lodgements, not that you've paid them. There are some excluded employers. I'm not sure there's going to be too many in this for the first four that are in this webinar, looking at this webinar, but we'll go through it briefly. The entity is subject to a major bank levy. The entity is an Australian government agency or local governing body wholly owned by a sovereign entity. If the entity is a company, if a liquidator or provisional liquidator has been appointed, or if the entity is an individual and a trustee in bankruptcy has been appointed, then you'll be excluded from this program. The one that may affect some people is the JobKeeper payment. If the employer is entitled to a JobKeeper payment for a fortnight that begins in the period of the JobMaker, then you can't get both. So you can't have JobKeeper and JobMaker. You can only have the JobKeeper. Now, if you do happen to hire someone, while an extra person that's eligible whilst you're on the JobKeeper, then that person can still be eligible once you come off JobKeeper. So for example, if an entity is receiving JobKeeper payments for employees until the end of this quarter, 3rd of January, the entity cannot receive JobMaker hiring credits for the period 7 October 2020 to 6th of Jan 2021, but could potentially be eligible for JobMaker from start on 7th of January 2021 if they don't qualify for the second part of the JobKeeper too. So if you have, if for example, you have an employee, you add an employee in November and all the eligibility suits, you can't get JobMaker for them but for November, December, but starting from 6th of January, you can apply for JobMaker credits for that period. Careful to note that you can only claim JobMaker up until 12 months after the start date of the employment of that person. So because you're blacked out because of those 2 months, that will shorten the amount of JobMaker that you can get for that particular employee. But you can get it after once you come off JobKeeper, which is important. Other government payments. So the ATO has indicated that if an entity is claiming JobMaker credits, then it cannot receive the following payments: supporting apprentices and trainees wage subsidy, the apprentice wage subsidy, boosting apprenticeships commencement wage subsidy, restart youth bonus, etc., etc. They're on the list there. Importantly, the feedback that we've been given is that the ATO won't necessarily stop you from claiming the JobMaker on these employees, but the agencies running those programs then may stop you from getting the subsidy on those programs if you're applying for the JobMaker as well. So really be careful to make sure that that we are accessing the right system to get the most benefit for your business. The additionality conditions. So this is really the integrity rule to make sure that the policy of JobMaker is doing what it was supposed to do, and that is to create jobs. So it's basically trying to make sure that businesses what they don't want businesses to do is to say fire a full-time person and then hire additional people that they can claim credits for. That's obviously not what the policy is about. The policy is about creating new jobs, not changing it over just to get some money back from the government. So the additionality conditions include that the employer has at least one eligible additional employee for that period. So the employee has a headcount increase for the period. Now we'll go into a bit more detail about that later. Basically, you've got to increase the number of people that you've got on your staff. The employer also needs to have a payroll increase for that period. So you need to be paying more money. So that's designed to stop somebody from going, well, okay, I'm going to terminate the employment of a full-time worker and hire 2 part-time workers at 20 hours, who I can then get to do get the JobMaker for both of those. So that's just it's really just the integrity provisions to make sure that the JobMaker is doing what it's designed to, and that is to make jobs. Registration with the ATO. So the employer must notify the ATO that it elects to participate in JobMaker. The rules require this to be done by the end of the period, but the ATO has extended this till the end of the claim period. So therefore, if you want to claim for the first period, the deadline for the first period has been extended from 6th of January and is now 30th of April 2021. So once again, like I've said with making the claim, just register as soon as possible, as soon as you can get these details done, and then you're in the system and you don't have to stress with any last minute rush. Only needs to be done once. The registration with the ATO details can be amended up until the first claim is submitted. The entities must provide their headcount at 30 September 2020, their payroll for the 3 months up to and including 6th of October 2020, and their contact details. The ATO reporting. So the ATO will get a lot of information through your single touch payroll. So those obviously get the wages, and they'll get headcounts and things like that from your wages, and anything additional that we'll need to provide on your quarterly declarations. You'll need to provide TFN, date of birth, full name, and start date of employment, etc. from that. Here's another list of what is required to complete the claim on the ATO online. I suspect that your quarterly declarations, a lot of this will be pre-filled because they'll have the baseline amounts, the baseline headcount, the baseline payroll amount from when you registered, and they'll have a lot of the details from the single touch payroll anyway. So I suspect that the quarterly reporting, fingers crossed, the quarterly reporting should be reasonably straightforward if you've done the registration process already and if you've got the STP and it's all right. But this is a great place to check and make sure that everything is flowing through correctly, because obviously occasionally things go wrong with the ATO and it's talking through Xero or whatever accounting system you use. So it's a good place to check it that everything is right before you submit. Making a claim. So claims must be made during the claim period. So as I mentioned, no extensions or exemptions are available. Once a claim period has ended, the employee cannot make a claim for that relevant period, and no amendments can be made to the claim after the claim period has ended. So the ATO are telling us that this is hard and fast rule. Sometimes things can change, but at this stage, what we're advising is that the ATO have told us that this is absolute and you can't go past this deadline. So this is why we say make sure we're getting things in early so that we can address any issues before the claim period ends, essentially. So the employee conditions. So some of the basic things, they must be employed by the entity at some point in the period. They must have commenced employment with the entity between 7th of October 2020 and 6th of October 2021. When commencing the employment, the individual was at least 16 but less than 36. Okay, and then we've got the two different pay rates in there. So they're the basic conditions that the individual must meet. Average working hours, they must have been paid, have worked or have been paid for an average of 20 hours per week for the time they're employed in the entity during that particular JobMaker period. This is the one that's going to make it the difficulty, because you might necessarily know this one. The pre-employment condition. So the individual must have received the parenting payment, the youth allowance, except on the basis of full-time study or new apprentice, or the job seeker for at least 28 consecutive days in the 84 days before the commencement period. So it can't just be somebody in that age. It's got to be someone who has been receiving one of those particular payments as well for that time period in the last 84 days. So that's going to be the issue about how, when you're hiring people, you may not know necessarily if they're going to fit that description. The employee must give the employer a written notice in the approved form confirming that their age condition was met, that they met the condition regarding the social security payments, and that they have not provided notice to another entity of which they are currently an employee. So you can't claim it twice, the same individual. So this can be done on, the ATO has a pro forma that we will provide. You don't have to use the pro forma, but you may as well. Obviously that's the approved standard form. So I would recommend using that and having that in place. Our understanding is that you don't have to provide that necessarily to the ATO, but obviously you want to have that on file, just in case the ATO ever asks. So really important to get that one locked in as early as possible before you make your claim. Excluded employees. Some employees will be excluded because if they've been a contractor for you at any time in the 6 months before 6th of October, this is to essentially stop businesses who had people operating as subcontractors to bring them on as employees to get the JobMaker credit. So they've stopped that rule. And employees are not eligible if they commenced. So they become ineligible after 12 months of coming on board. So that's what I said before. So you only get to claim the JobMaker for 12 months. JobKeeper, items like the JobKeeper may reduce the amount of time that you can claim it, because once they've been with you 12 months, you can no longer claim a credit for that employee. Some further excluded employees. So this basically the entity depends on your business entity structure on the left-hand side. So basically, but we're looking here, relatives of the sole trader or the partner, or relatives of the company, or the company director, shareholder, trustee, beneficiary, those items listed there. So if you're hiring a relative or a close associate, then they'll be excluded from the JobMaker system. Close associate or relative, we're talking basically about anyone in your family, so immediate family, lineal family, descendants, and grandparents, and also uncles, aunties, nephews, nieces, things like that. Also includes your spouse and your spouse's relatives in the same format there as well. So it's basically just saying you can't just add people from your family that are close to you just to get the JobMaker. Obviously, if you've got someone that you're not quite sure about, just let us know, and we can have a look at go through the specific details for you. But I think it's a reasonably straightforward rule there. I will just say that what we see from the rules is that the excluded employees do still count in your head count. So if you add one of these excluded employees here, they will still increase your head count to potentially get you over the line of a head count increase if you did in fact need it. So they are still counted in the head count. Headcount. So basically, to ensure you've got a headcount increase, you need to compare the number of employees at the end of the JobMaker period that you're applying for with the baseline headcount. So the baseline headcount was the headcount of the number of people you've employed on the 30th September 2020. Now, interesting here, so you can have no employees as your base count at 30th September 2020 if you weren't employing anyone at that particular stage. That seems pretty much common sense to me, but apparently the draft rules said that you had to have that you were automatically considered to have one employee. So that's a change. That seems to be a common sense one there. The baseline headcount will potentially change for some businesses. We haven't had a look at that at this stage, but they will potentially change for some businesses following 4 periods. So obviously that's next year. So we can revisit that at a later stage. Along with the headcount increase, you'll need to show a payroll increase. So that's comparing the payroll amount for the period with the payroll amount for the relevant period ending on 6th of October 2020. This calculation, we're focusing on when the payments are made, not the salary range. So it doesn't matter if they're paid in arrears or before or halfway through the pay period. It's the amount, it's the date that the dollars were actually paid out of the bank account. Payroll amounts include the normal salary, wages, commissions, and bonuses and allowances are included. Withholding amounts are included, and salary sacrifice, super, and fringe benefits is also included in this calculation. Importantly, though, termination payments are not included in this calculation. So if in that period, particularly in the base period, that you've had a person who's been terminated or has left your entity and you've had an annual, large annual leave or long service leave and payout, that dollars won't affect your payroll amount for the period. So that's a really good provision there. The baseline payroll amount depends on the number of days in the JobMaker period. I'm smiling a little bit here because this is another example of the ATO just making things just a little bit more complicated. So the baseline payroll depends on which JobMaker period you are comparing it to. So the JobMaker period, depending on which one you look at, can either have 92 days, 91 days, or 90 days in it. So if you are comparing, for example, the first period of JobMaker has 92 days in it, then you need to go 92 days back from the 6th of October and calculate all the dollars paid in that period. If you're looking at JobMaker for the second period, it is 90 days. So you only go back 90 days. So your baseline payroll could change depending on the date, or depending on the JobMaker period and the dates that you pay your staff. So just a little bit of a funny one there just to keep an eye on, and some of those are 91 days as well in there. So just a little bit of a strange one there. So something to have a look at and keep in mind when you're calculating your payroll baseline. Calculating the payment. So at a high level, the hiring credit payment for the period is the lesser of the headcount amount for the period or the payroll amount for the period. So the difference between the headcount for the period and the baseline, and the payroll amount and the baseline. The ATO will use the STP information and your declaration to calculate these details. So basically, but essentially, if you are adding payroll and you're adding headcount, you will have access to the JobMaker credits. The ATO has a 10-step process for calculating the payment. The ATO has provided a calculator to help with the estimates, and we can send that out with our emails. The headcount is based on a mixture of factors, so total increase in the headcount, number of days in the period, etc., and also looks at whether the employees are higher or lower rate. The integrity rule. So the entity is disqualified from JobMaker if it terminates or employment or reduces working hours of employee and it is done for sole purpose of obtaining the JobMaker or increasing the JobMaker credit. So similar to the additionality clauses, obviously the additionality clauses don't necessarily pick up everyone. So you could, for example, decide you're going to hire 10 new staff, but you're also going to potentially, instead of hiring just 10, you'll terminate 5 and then hire 15. To increase your JobMaker credit. So this is just another integrity rule to make sure that that doesn't happen. So as long as you're not acting, to artificially inflate or increase your headcount or to increase your JobMaker credits, then the integrity rule shouldn't be a concern for you. Tax implications. So it is included in your assessable income of your ordinary income. So we'll go into tax return. The employee claims the deduction, so the wages, you get a deduction for the wages as per normal. It's not subject to GST, and so it won't be reported on your BAS. So it won't go in G1 total sales, and there won't be no GST, and there'll be no GST payable on that as either. And so that is it in a brief webinar there. So if we have any questions, I'm not sure, Eric, if you've seen any questions pop up, or if we do have any questions, please pop it in the chat. I'd be happy to answer.
Yeah, just a couple of questions. So if a business has received an extension to lodge their 2020 tax return, can the business lodge it by the extension date, or should it be lodged before 6th of January?
Yeah, so if there is a lodgement deferral date, if it has been deferred with the ATO and the ATO has accepted that, then it won't affect your JobMaker if you've got a lodgement deferral. Those aren't necessarily easy to get. So if that's something that you think if they think the business will need that, get best to get on that as soon as possible to make sure that the deferral can be in place, because the ATO will need give special consideration to that.
Yeah, just another question. Is there a particular number of hours that an eligible employee has to work per week?
Yep, so an eligible employee has to work 20 hours, average of 20 hours per week. So that can be taken up in paid leave as well, because obviously you might have some paid sick leave and things like that. So it's an average of 20 hours per week, and you work out the averages, and it's an average over the claim period.
Okay, so we got another question. So if we are currently receiving JobKeeper for a staff member who has resigned, we can't replace them and then receive JobMaker for the new staff member.
So you can't be receiving JobKeeper at all and have JobMaker at the same time. But what you will get is, so if you hire that staff member in December, for example, once you come off the JobKeeper program, then you can start getting the JobMaker credits for that person if they are eligible. So it's just going to reduce the amount of time that you can claim. So normally you would get 12 months from the employment of that particular person, and you'll get 12 months. In this case, if you hire them now, you won't get, say, maybe the first 2 months because you're on JobKeeper, but you'll get to claim the credits for the next 10 months after that. So still register, still get them in the system and do all the process, but you can't start claiming the JobMaker until you've stopped the JobKeeper.
Yeah, I think
to mention that you're still going to need to show an increase in the headcount as well. So if you're just replacing that one staff member, potentially depending on the timing there when they resigned and things like that, if you're just replacing the one staff member, you may not be eligible based on the headcount rule, but that's another issue there.
Yeah, I think that's pretty much the questions that we have received.
Awesome. So I would like to say that if anyone needs any further assistance or has any questions, we can help with with the reporting obligations and the registration. We can discuss a quote and fee to describe that. Hopefully we've given you enough information. We'll continue to provide further information when it comes to hand on how to best handle it yourselves if you so wish, but of course we are here to help our clients in all these matters. If I can just, whoops, there's my computer stopped. There we go. Please see our YouTube page and like and subscribe our YouTube page. Lots and lots of videos. I assume this webinar will be up there at some point as well, but lots and lots of content there for business owners to have a look at. Just covering a wide range of topics from superannuation, financial planning, business, zero tips, tax obligations, things like that. So please check it out and subscribe. Our leadership team and Shannon, our managing director and founder, myself and Daniel are here to help you, as well as, of course, the rest of our staff, including Anarika. So thank you for being moderator today, Anarika. Thank you all for attending. Please don't hesitate to contact us if you have any further questions. Thank you.